Welcome to Tangent PropTech, where real estate meets innovation and goes a bit off script. I'm Edward Cohen, PropTech entrepreneur and your host, alongside my co-hosts and PropTech venture capitalists Jeffrey Berman and Zach Ahrens. On this show, we bring on a guest who's shaping the future of real estate. We dive into housing innovation, climate tech, the future of work, and everything transforming our buildings and cities. And of course, we go on some tangents. If you work in real estate, PropTech, development, or if you're just obsessed with making buildings and cities better, this show is for you. Because the best real estate ideas start with a tangent. If you're building something impactful in real estate or tech and want to reach our audience of decision makers, investors, and operators, email us. That's tangentcommunity@gmail.com. Hi, I'm Edward Cohen. Welcome to Tangent. Today on Tangent, we have Liz Hart, President of Leasing at Newmark, North America. Hi, Liz. Where does this podcast find you?
It finds me in San Francisco today.
Beautiful. Let's get into it. So, you recently shared that office supply in the US is shrinking for the first time in 25 years. Talk about how the market is shifting, and is this a warning sign or is it a turning point? And what does this shift say about how the office industry is adapting?
There's no question that 2025 feels like a turning point, but for me, a turning point in a very good direction. From 2020 to 2025, everyone rethought office. What executive in the world wasn't thinking about how their office and how their real estate either drives their business or doesn't drive their business during that period of time? Because we're in a moment of a reset. Now it feels like there's much more stability in the market. There's increased demand. Demand is up 30% year over year, which I think is a huge validation of the office from an executive point of view and how an office can help drive productivity and employees and business outcomes that are trying to be achieved. And the market is reacting to this. Now, look, there's still what I call like the underbelly of product that hasn't repositioned itself to meet the demands of tomorrow. And we will continue from a statistical perspective to see distress in the market as that kind of gets processed through the system. But to talk to your question directly about the state of the office supply, there hasn't been a lot of new development that's been added to the market in the last couple of years. It's definitely diminished, but at the same time, we've seen a repositioning because offices, same applies to retail, where it doesn't meet the need of the customer and the demand that's in the market, it has the opportunity to reposition. And that could be the trend that we've seen of office being positioned into residential. We think there could be 2 to 3% of the total office market that could reposition that way. But I don't see that as being a bad thing. I see that as being an opportunity for that asset to really have a new life in a different way. I mean, think about lofts in Tribeca, right? Those were not built to be lofts originally. This has been happening for generations, that space can be reimagined for the future demands of tomorrow. And I think today is no different than that. I also think we're just on the cusp, maybe a little bit too early, of having some new development being intriguing again. And obviously some of the changes with the One Big Beautiful Bill and some of the things around building tenant improvements will shift how landlords are approaching supply in the market and so approaching it from a repositioning perspective as well. But I think it's a turning point in a positive direction.
Certainly. Thank you for that. Just for our listeners to get additional context on where you sit and what you focus on. So at Newmark, you help the occupier as well as the agency representing landlords, or just quickly summarize what you and your team focus on?
Yeah, so Newmark has two primary clients, the occupier and the investor. And across our entire business, we serve them end to end, whether that's advising on a transaction, doing their build out. The division that I run, the leasing division, is the 1,300 advisors who really are there to help figure out like the market advisory transactions, but they also integrate the other services. So this is something that's really different from when I first started in the business 20 years ago. 20 years ago, the market norm was you'd hire an advisor or broker, they would find you a specific transaction, you would complete that transaction, and that was the end of your relationship. But the world's changed, hasn't it? And the data around your lease and the data around how you manage your business and the KPIs around what your real estate is doing for you is something that's more top of mind, across more executives than it once was, not just behind the corporate services, but also across medium and small size businesses. And so what we're really looking at is how can our advisors really drive that business outcome and that value even if it's that 10 to 12,000 square foot lease. Like, let's not make it too transactional. Let's figure out how we can make sure we do that transaction, do it well, but also deliver value to the business.
That's awesome. So let's start on the occupier side. So when you and your team of advisors are working with an occupier that, say is looking for a space, how are you advising them in terms of, they have their own concerns and uncertainty when it comes to, the long-term viability of their business, but they certainly want and need an in-person space to get the team together, to host clients and whatnot. So how are you advising them, and how are occupiers in 2025 thinking about leasing an office? What are they looking in a space? How big, how long leases should
Yeah.
be, as the length of office leases have shifted from more longer term to more, medium or even short term.
There really is not a one size fits all when it comes to your real estate solution. So when you're trying to figure out what is the best way to approach it, one thing to do is to really sit back and say, what is my business trying to achieve? Do I know what my headcount is going to be for 36 or 60 months? Do I think that I'm on a high growth trajectory? Is there a possibility that I'm really planning on selling my business? Do I think that my talent should be concentrated in one market or in multiple markets? And this process of understanding what's happening at the business level and what the executives really want to drive in the business is a fundamental part of the process and a really important part of the process to try to get to the right leasing and advisory solution. So one thing we really want to do is ask a lot of questions up front, maybe more than you'd expect, but it's because you have to understand how that group thinks and what they really want to achieve. And then once you have that understanding, it depends. If there's a startup and they're growing very quickly in headcount and they're not sure if they're going to be acquired or if they're going to scale their business, doing a short-term plug-and-play sublease is often the right solution, right? Low capex, high flexibility in terms of term. But if you're a longer business, more stable business, we're seeing this trend around owner users. Like, what an interesting trend to see reemerging again, where certain owners, ones that are definitely on the later stage of their maturity level, are really interested in owning their assets and leveraging their credit to make sure that they can get better cost basis really for their real estate solutions over long durations, sometimes decades of time. And so there isn't a one size fits all. There's different experts and different approaches depending on what that business is trying to achieve.
Interesting to navigate this environment, certainly. Now, when it comes to the landlord side, for a second, let's leave aside the type of buildings that may be, your B or C classes, where they were built a few decades ago. And more importantly, to today's environment, is they're just not in an ideal or desirable location, whether not near public transport or not accessible by vehicle, because those, in many cases, you likely have to knock them down to do something new. But for the buildings that are either that have spaces that are in desirable locations, however, the design, the layout is not adept to today's market, or they have antiquated lobbies and amenities, what are you advising them to get them leased faster? Because they also have to pay their mortgage, they have to refinance. How are you advising the landlord side that have space that may not be, as desirable in today's market, but is still within a location that is attractive?
Yeah, absolutely. So I'd say two things to start, then we'll answer that question directly. The first is you want to look at what is the highest performing assets in that market? What attributes do they have? And what kind of demand profiles are in that market right now? Like, is there additional demand or is it only for that space? And what you'll see as a general trend across the US right now is trophy space is single digit vacancy. If you have post 2019 construction, it's performing better than almost any other asset class that's out there. So very, very high performing, which is, incredible to see, right? Especially when you see some of those other headlines about the real estate market out there right now. So if you're repositioning an asset, you want to look and see what are the trends around that? Are those big blocks that are being leased? Are they single floors that are being leased? Are they spec suites that are 5,000 square feet? Really understand, what are those tenants looking for, both from a size perspective and an amenity perspective at the top of your market. The second thing you want to look for is what is the demand profile? Are there tenants out there that are willing to do a longer term deal so that if you reposition this asset and you put that money out there, that you're going to get a return on your investment? If you have a great product and you want to put a lot of money out, you want to make sure that not everyone wants a 1-year deal, right? Because unless they're going to pay a quite high rent, you're not going to get the return. So you want to look at the demand, look at what they're willing to pay, look at the return profile. And if those things line up, then you can reposition that asset. I mean, actually, the building I'm in right now is 1 Sansom Street in San Francisco, which was a building that was a good building, but definitely not considered the tippy top of the market until more recently. And the owner really made it a massive improvement to the building by improving the ground plane. Really important, right? When you walk up to the building, it feels really good. They have an incredible restaurant. They have a great gathering area with couches. I mean, every time I'm in town, I end up having all of these meetings just in our own building because it's really facilitating that ability for the tenants in the asset to connect across the community and with other businesses they're doing work with. And they've had an incredible lease up of the asset. I mean, they just attracted Databricks, which is a large technology company, to move their headquarters. They've attracted other single floor deals, other, partial floor deals, but it's because they really made it stand out in the market. When you come in here now, you know that it's a different kind of asset and something that's really going to help attract employees into the office and also just make a splash, right? When you show up, you're going to feel like you're in somewhere special.
The value of a first impression, right? People sometimes think of the lobby as just a place where people come in and go out, but it's so much more than that. Not only, as you say, for employees to want to work at a company that is there, but also for the occupiers to be able to host and attract clients in a space that gives them the best first impression possible.
There's certain buildings that have a sense of pride that's almost like a membership, right? Where you really feel like you're a part of something, a part of a community by being a part of it. That's a unique thing to try to offer. But, certainly Transamerica would be one of those buildings out in San Francisco, One Vanderbilt out in New York. There's just certain buildings that really have that cachet, and it is an attractive thing, and they see the returns for it.
Certainly. Let's move on to tech and AI, and how are you and your team bringing it into the brokerage world? So you've led a 2-year push into AI and platform integration at Newmark. What does this tech transformation look like in practice, and how are brokers and clients benefiting?
My background was in San Francisco representing technology companies. So I had a nice background in understanding what our clients may want, given that technology user tends to be an early adopter of this type of tool. But I think it's pretty simple for the most part, which is that the traditional brokerage model is highly reliant on manual processes and on PDFs. You trade PDFs back and forth and not customized data sets. And what everyone is looking for, because they're used to it across e-commerce and they're used to it across booking travel, and they're used to it across buying all sorts of other services across the internet and across the web now, is they're just looking for a more modern experience of how they can make sure that their time is spent on driving the best possible outcome for their business, not doing the copying and pasting of yesterday. So all of our tools are there to make sure that 2 things happen. First of all, I think you hear this in our earnings, but Newmark really believes that we have the top talent. We make big investments in talent. We believe in talent. We believe in that not only on the advisor and the broker side, but also across our entire support system, because we know that if we attract those really great people that want to move the industry forward and deliver great outcomes for our clients, that's one of those things that you can't replace when you have it, and especially because it creates a great culture and environment that we're really proud of as well. And from a client perspective, I think the promise that we're trying to deliver for them is just more customized insights. And customized insights is something that great advisors have been doing on their own, right? They do it manually. How can we have that happen a little bit faster so that we can free up their time to be really strategic and think outside of the box about the solution? Because, there's this saying, like, you can't necessarily think while you're running. Have you ever heard that? Like, when you're running, although it's ironic because yes, when you're on a jog, sometimes you get some good ideas. But the process is like when you're running fast and you're sort of doing a bunch of to-dos, sometimes you forget the obvious, really great solution that's right in front of you, right? And that's true of our clients and that's true of our team. And if we can remove some of those manual processes so there's more time talking about how do we drive the business forward, what's really going to work for the employees, and using that really higher level thinking, we think that that's going to be a big differentiator in the market for us.
My grandpa used to say, dress me slowly because I'm in a hurry. So not sure who he was referring to there, but basically so spot on when it comes to top talent out there and the brokerage world being so competitive, and especially with newer commerce in the last few years with being venture backed and trying to lure brokers with tempting sign-on packages and bonuses that may seem tempting at first, but once you open the hood, you notice that there wasn't too much technology there to begin with, without naming names. But
Yeah.
at Newmark, you really value how talent, sees the tech that you provide them to ultimately deliver better results for clients.
So two things I think are interesting to add on top of that. One is, and Kevin Will, who's the chief product officer at OpenAI, said this in an interview, and I thought it was really smart and brilliant, and it's so applicable, which is the models you're working with today in AI are the worst models you'll ever work with again, because they're constantly improving. So everything that you're doing is only on a trajectory of change. And then obviously you've seen, especially Mark Zuckerberg, some of the talent he's been acquiring in the AI world. So it's interesting, right? In the age of AI, some of these companies, Mark being a big leader in the technology sector, what he's saying is so important. Talent, 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 talent.
Yeah, some of these offers, they're mirroring sports signings. And I mean, you can't blame them because they have a more profitable path to increasing the enterprise value and the revenue of the company than some of these sports teams. So makes a ton of sense. Now, talk about data-driven leasing and advisory. You're providing automated market insights, custom comp delivery. I was also reading one of your colleagues' recent interviews in the Commercial Observer and how you're adding geospatial data, including flood zones, fire risk, to really power your insights. So, what parts of the leasing experience are being automated with this data versus augmented?
So I would say, for the past, at least 5, 10 years, probably 10 years, there's been an incredible amount of data that's available from a leasing perspective, right? But it's not available directly to the customer. It's not available directly to the broker. It's kind of behind the scenes a little bit, if that makes sense. And it's only accessed through multiple different points of entry. And what we're really trying to do is unlock those doors and make sure that that data is really available to the customer and to the advisor so that they can do it at the right time in their process, right? So that they don't have to look for it, but it's delivered to them in the right time. So using the flood zone as an example, that's one that would be important, or an earthquake zone, or anything along those lines. If you think about, what has been happening is absolutely, when you're working with corporate services, when you have it integrated into big dashboards, that's been happening. That's completely available. But it's not necessarily sending a trigger to someone if they are looking at that space, right? That's like, hey, reminder, just so you know, this is what's happening in this building and this property intelligence. And so we're not 100% of the way there yet. We're on our way on a journey that will be long. And, the journey of learning and intelligence will never end. It will always be just more things that you can add and aggregate to drive your decision making. But we really feel like we're moving that direction where we're going to be able to not just have people look for the right answer, but have that right answer delivered to them in their normal workflow so that they can up-level the experience for our clients.
This episode is brought to you in collaboration with CREtech, one of the most valuable events I attend each year. It's happening October 21st and 22nd at the Javits Center in New York. Whether you're a real estate owner, operator, developer, or tenant, this is where the industry comes together to share ideas, explore new tech, and build relationships that actually move the business forward. I've had the chance to grow real partnerships and discover solutions here that I probably wouldn't have come across otherwise. And this year, CREtech is rolling out something new for 2025 that I get to tell you about. The Hosted Meetings Program. It's designed for qualified real estate professionals, and it covers your full event pass plus up to $800 in travel and hotel costs. All they ask in return is that you take a few short, curated one-on-one meetings with tech companies that align with your business needs. It's a smart, low-pressure way to explore what's out there without the typical event costs. If your company owns or manages 1,000 residential units or 1 million square feet of commercial real estate, and you're involved in tech or operational decision making, this is definitely worth checking out. You can learn more in the show notes and see if you qualify by reaching out to us at tangentcommunity@gmail.com. I'd love to help you get set up and hang out at the event. Use our code PARTNERTANGENT20 for 20% off your ticket. See you at CREtech. Now, back to the show. Fascinating. I think, especially with climate change, having more data certainly will help make better decisions.
Yeah.
And when you put it plain and simple, a lot of a broker's job is following up with value, relevant, timely, without being quote unquote annoying, and
Exactly.
empowering with data like this and education is super important. From a brand perspective, company and personal brand, you've successfully leaned into LinkedIn, social, which is not the most usual for a commercial real estate executive, and more should do it. So, is this a strategy about attracting talent, engaging clients, or a little bit of both?
So I'll say two things about this, which is the first, I've used LinkedIn for 20 years. I mean, I was probably one of the very, very early users of it. LinkedIn started in Silicon Valley, where I was a broker in San Francisco. And I mean, there are hundreds of people that I prospected in the early years, way before Sales Navigator, and kind of understood who they were and understood their business through using LinkedIn. So I think it's an incredible community of business professionals and a great way to learn. And it always has been. I think it's a great way to get your message out at scale. And that's why I've leaned into it. I've gotten a lot of benefit out of it, right? It's not just about what you put out there. It's about what people are giving back to you and the leads that are both, from a recruiting perspective, from a client perspective, or from a knowledge sharing perspective that come back. So I think that's one of them. And while it may be a little bit unique in the commercial real estate sector, I don't think it's unique at all in the financial services sector. And that's something that I've really looked at as a model. So if you look at the CEOs of many of the financial services sectors or the presidents of those divisions, they're really quite active about getting their voice out there. The technology ones as well, but definitely in the financial services and the banking sector, you see that a lot around private wealth, a lot around these other services businesses. And so from my perspective, Newmark is a fourth largest and fastest growing in its category. So what does that mean? It means that by definition, we're a little bit of the challenger, right? Because when you're the fourth largest and fastest growing, that's what you are. You're not the number one or number two in this space. And so if you look at other successful tactics that, companies have taken on, certainly leveraging social and earned media is one of the ones that you can do to drive your business and drive your message. So you can make sure a lot of people know how you're approaching things a little bit differently than your peers and do so at scale.
I love that how Newmark and your team embrace the challenger brand, because you have over 1,300 advisors on your team. That still makes you number four, but that also allows you to do things a little differently, to punch even more above your weight, which is awesome. With such a wide leasing team across the US and Canada, how do you align agency and tenant rep around a consistent strategy?
Well, there's some things that are unique and bespoke to the client, right? So there's different specialties and different aspects of it where there are multiple strategies rolling at once depending on the client's needs. But one of the things that we've really leaned into is, it sounds kind of old fashioned, but it works, learning sessions, just making sure that we have multiple every single week. They're from everything from like, how do you work with property management, to understanding a market condition with our amazing thought leadership and research team, to understanding how you work with a new technology tool, to understanding a workplace strategy trend. And we've had really great results with this, with our team coming in, understanding, they're quick, 30 minutes or so. You can watch them live, you can watch them later, but you can understand, what's happening from a trend perspective and continue to up level how you can basically advise your customers and the value that you can deliver. And we think that that is a really incredible way of doing things because it's always happening. It's constantly improving. We also have a team of incredible market leaders who are really the carriers of our culture, in addition to 100 other things they're doing for us. And they are there to be, the front person, like the advisors can call at any time to be like, hey, I'm trying to figure out how to navigate this problem, or I'm looking for this solution, and how do I kind of get together? And so having that really tight knit group of leadership that's in really close connectivity with each other, it really matters. So learning, leadership alignment would be number two.
All goes back to education, and yeah, not only helps align the team, but also helps them know that you're investing in them because you care about their professional careers and the job they deliver for clients. So in terms of what occupiers want in 2025, you mentioned it a little earlier, but what's something that you'd advise a medium-sized company in a tier one market, call it New York, call it San Francisco, when they're looking for space? And I'm not sure how much you work with like flex office spaces, but for companies that are like are not early stage, but also aren't the juggernaut yet, How do you advise them between choosing flex space versus their own space, or does it depend?
It definitely depends. It depends on their business objectives first, like we talked about. But then also, I'd say the availability of plug and play subleases in the market, right? And what does that look like from a cost perspective? And then also, what talent are you hiring for? Do you have the people who can help manage that space on a day to day? Or do you really need to have that flex provider that also brings that hospitality layer in, right? So that there's coffee there, there's the sparkling water that we all drink way too much of. It's all just kind of right there at your fingertips or not. So it is a quite bespoke solution. I think the other thing that I'm watching really closely and interested in is how those landlords are leading into more flex offering themselves. How are they customizing space, creating turnkey environments that a tenant can just, go straight into, that's plug and play and ready to go to compete with flex. And when you're evaluating the market, you would look at sublease spaces, those turnkey with furniture or flex solutions, and then also the more traditional flex operators all at the same time to see, which one really is the right one for your business.
As I was saying that, I remember that was Newmark the one that acquired some of the Notel's
We
assets
did.
a few years
Yeah,
ago.
we
Hmm.
did. Yes, correct. We did.
Nice. How do you see, the trend, or maybe not a trend anymore, but the practice of brokerages running their own flex space brands?
Brokerages are really there to meet the demand of their customers, right? And to look at the landscape. And there's no question that the client base across the US is interested in flex. And that's why you've seen many of the brokerages make strategic investments into that space. And I think that's going to continue to evolve and change over time. I mean, truthfully, a lot of these small and medium sized businesses, they don't have the bandwidth within their own teams to really create that environment, right? That's, they're hiring for an engineer, they're hiring for a salesperson or a marketing person versus heads of real estate, particularly these smaller stages. I think the trend is going to continue, and I don't think flex is going away anytime soon.
Yeah, I tend to agree. So you were describing earlier how you're evolving Newmark's leasing function into an end-to-end platform. So how does that change the client relationship, and how does that translate into value for the client? Is it that they'll get faster responses, they'll be able to negotiate better leases? How does that look in practice, and how does it translate into value for the end user or the landlord?
Yeah, I think it's starting with that question of what does this business really need from its real estate? What is its driver? Why is the talent coming in? Why is it not? And how can we help that decision making within that business find the right real estate solution for them? And if you're just trying to get someone into a space and do the transaction and walk away, you might miss the opportunity to do workplace consulting, as an example, and really try to help them build the right strategy to get their talent in the office. Or you may miss the fact that the space that you're going to lease them also needs some project management, right? Because there's some changes to that space that needs to occur. Or especially in the age of AI and changes to data, that they really need a lease administration system for their critical dates. They need to make sure that they know how their whole portfolio is looking, not just that one space that you're sitting in at that moment, but their whole global portfolio. And so we really look to create repeatable and scalable processes so that we can help make sure that that real estate is a driver for the business across all of that business's globe, whatever that is, whether it's one location or 50 or 100 or 500. And I think, the role of the advisor in that is just to make sure that they are a partner to that decision making team, asking the right questions and helping bring in the right team with them, right? None of us can solve everyone's problems, not one of us. It's only together when we really build the platform and bring our various expertise across geography and service line that we can really add that kind of value that our clients are demanding.
How do you think about building in-house versus outsourcing when it comes to your data and your tech?
We work very closely with our CIO and with our tech and data team to come up with a strategy of how we want to approach it across the entire market. I do think data is incredibly important now, and we have a commitment to client data security. That's very important to us as well, especially right now. But we do use a mix of tools that we've built and then also tools that we're partnering with, as long as they have the appropriate security protocols in place to make sure that that data is being managed appropriately, especially in the age of AI.
Certainly, something that is increasingly a concern, and something that should be taken very seriously. Something that I just thought of, I'm just going to throw it out there. Feel free
Yeah.
to answer or not, but thinking about a recent settlement by RealPage on the residential side, where landlords were allegedly unwantingly or on purpose coordinating how much rent to charge in a given market. And now there's been a settlement in place basically where they agreed not to share any data in that regard. Do you see this becoming an issue on the commercial side of leasing if landlords start using similar tools and sharing the data either knowingly or unknowingly?
I don't think that certainly it's all within the real estate realm. That is true. But the commercial real estate, there's much more fragmentation of the ownership, than what the RealPage lawsuit was, at least to my knowledge, and I'm not an expert in it. But you have to think like, the coordination across all of the different institutional investors that we have, across all the private capital investors that invest in real estate, across all the different product types that are out there. I think that, the world is going to need and expect more data. I don't think that's something that will change in real estate or in any other segment of the services business. But I don't see it as being an alignment that is essentially creating the same strategic imperative where three landlords in a row are going to raise rents at the exact same time. Like, I don't see that being really even possible in the short run for commercial real estate, at least within my line of sight.
Yeah, also the spaces aren't as homogeneous as on the residential
Yeah,
side.
exactly. They're so unique.
Yeah. Good points. Last but not least, collaboration superpower. If you could choose one person, historic or living, to do a partnership with, who would it be?
So is this anyone that I would want to collaborate with?
Anyone. Can be dead, can be alive.
Oh, that's easy.
Can be Larry Harvey.
Oh, yeah. Steve Jobs. No, Steve Jobs. Steve Jobs all day long for me. I adore his philosophy on several different fronts. First of all, the simplicity of the design, yet the complex functionality. How amazing is an iPhone? You look at it and it's so simple, it's so strategic, it's so easy to get to what you actually want to do with it. It's so approachable to so many different people around the world. And it's created an opportunity for so many other businesses to be built on top of it. It's a platform business, which I think is really great. Also, some of his quotes around innovation and always staying hungry and staying a little foolish and not looking at yesterday, but leaning into tomorrow. That really resonates with me. As well as he had this really great quote on talent actually and recruiting, and saying, look, you spend some time trying to figure out how to motivate people, and then you realize that what you really need to do is find people who are motivated and hire them. And I think there's so much truth to that when you do have that really great team of motivated people who are leaning into building together, there's something super special about it. And it's also really fun to be a part of it. And that matters a lot to everyone as well. So yeah, Steve Jobs would be my collaborator for sure.
And if I'm not mistaken, Steve Jobs' first daughter was named Lisa. So Lisa.
Close to Liz.
Close enough.
Yeah.
Liz, where can Tangent listeners, office owners, and occupiers learn more about Newmark and connect with you?
They can connect with me on LinkedIn or over email. My email's on our website, and you can learn more about Newmark at nmrk.com.
Liz Hart, President of Leasing at Newmark, North America. Thank you so much for coming to Tangent today and sharing your insights, your experience, and your wisdom with us.
Thanks for having me.
Muchas gracias, and thank you for listening to this episode of Tangent PropTech. If you learned something new or enjoyed the conversation, text a friend the link to this episode right now. You can find links, resources, and ways to connect with us in the show notes, or reach out anytime at tangentcommunity@gmail.com or on LinkedIn. We love interview suggestions, topic ideas, or just a friendly hello. We'll catch you next time. And remember, the best PropTech ideas usually start with a tangent.